Oh, sometimes I hate Mac. Right. Um.
Do you need me to disappear now?
You don't have to go. Yeah, yeah. Just if you're just quiet, it's fine. Fuck's sake! Why is there an error? Okay. Right. Right. It's fine. Should be fine. Can anyone drop in the chat if you can hear me? All right. Because my YouTube studio's gone all weird. Uh, yeah. Right. Can you see the screen all right as well? Because I also can't see that for some reason. We are going to look at GBP USD. What is that? No real-time data. Ah, that's interesting. That's crazy. I don't know why there's no data on no live data. Not that it matters. Yet, not until tomorrow. Everything's clear, bro. Go ahead. Great, great. Thank you. I don't know why YouTube's doing that to me. Right, so I'll actually make a start at 8 o'clock, just in case anyone else wants to get in here. But until then, we're going to be looking at the 5 minute, and yeah, just get the daily dividers and everything marked out. I am concerned about this though. That's weird. Should we do Euro or GBP? Let's do Euro. I haven't done Euro in a while, to be honest. It's Monday, Tuesday, Wednesday. Is there like no data from Friday's trading? That's crazy. I wonder if that was to do with anything with the outage or something, because let me see the other pairs. I mean, other providers. Okay, everywhere else is fine. It's just forex.com. That's fine. I'm gonna stick to forex.com just because I have a attachment to them. But and we'll get the Sunday opening price marked out. We'll also get the daily highs and lows marked out. missed my, and so this is Sunday opening. And then we'll also get some daily highs and lows marked out just to see, just so we can study how price marches up towards them or targets them. Make this dark red. Ah, I hate, I hate Apple Macs. Right, we don't need to have that high because that's just a Sunday high. Cool, cool, cool. And then let's get this low marked out as well. Oh, what? What time is it? 57. So it looks like we won't be able to actually backtest the Friday's trading, but to be honest, because this Friday was quiet anyway, just because there was no high impact news or anything, so I wouldn't have been trading it anyway, so I'm not too concerned about that. But nonetheless, let's go over here. And we'll start getting the hourly sessions marked out. So we have Asia range between 7 p.m. and midnight. So I always like to make that purple. And then we have London from 2 a.m. until 5 a.m. And then we have New York from 7 a.m. until 10 a.m. And then we have London close from 10 a.m. till 12 a.m. London close is one of those ones which I'll only trade if New York's quiet. And then between 12 and 2 or 4 there is another session where you do get retracements like this and such, but I don't really study that too much, so we're not gonna worry about that for now. But yeah, we're just gonna be looking at these sessions, and we'll start right from Sunday Asia. Not that I would recommend or suggest anyone trades a Sunday Asia session, because if you're going in the charts that early like that, you're bound to get eaten alive. Right, let's make a start. What time is it? It's 8 o'clock. Welcome everybody. And if you guys haven't yet joined the Discord, make sure to join. The link is in the description. Should be in the description. So what I'm doing here is I'm marking out the low and high of the Asia range, and then what we do is we like to look to see if both sides of that can get tagged in the following session. So I'll talk more on it as we continue, but when it comes to the London session and trading London sessions, I'm looking at the Asia range and how we treat it and trade our way through it. Also at 8 o'clock in Asia, there tends to be an expansion or a reversal. An expansion, and that's either in the form of a reversal or a continuation. So here's an example of that. So if we go to, where are we? 8 o'clock's here. How come that's there then? I'm so confused. Okay, that goes here. 8 o'clock, and then from here you can see that price makes its low after Asia session, so that should actually be down here, and then starts to trade on higher. Now this is very consolidated price action, a lot of back and forth, so I'm not really gonna look too much into that. We'll just start the analysis from Monday. And then what we can also do is split the Asia range into quarters. And this will help us with, again, navigating price and figuring out where we want to see it draw to, and where we expect to find resistance or support as it's trading. So you can see London opens trading aggressively lower. I usually wait till around 3 o'clock before I think about entering a trade in London. That's just tends to be when a lot of trade setups fall out. We don't actually take out the Asia low, which is quite interesting, but it's also a sign of bullishness because it's showing it's failing to take out any lows. I reckon if we were to compare, let's see, times like that, you might find that, say, GBP may take out a low, or dollar may be taking out a high, and that can help confirm such a move. But nonetheless, I'm looking at 3 o'clock for my setup to form, so 1 sec. Let's get one of these. Make that dash, and you can see that we have a fair value gap forming here at the 25% level of the Asia range, and we've had a level of movement. And remember, 3 o'clock, I'm expecting that to either be a reversal or a continuation. In this case, it's a reversal. And then obviously based off the higher time frames, it'll be ideal if we had that bullish bias to expect higher prices for the Monday. So that would be an entry here on the fair value gap. It's after 3 a.m. It's traded down in below relative equal lows, below here and here, which is also the 25% level of the Asia range. And the fact that we've had all this down movement can be considered as manipulation. And then when it starts to expand on higher, we'd start thinking about, okay, where could we be trading towards? That Sunday opening price is a potential level for that. And then we also obviously have relative equal highs up here as well. But I'll talk more on that in a second. Let's, for now, hypothetically enter this position. And then if this was too, like this entry right here is quite advanced in terms of how, how confident you'd have to be to want to enter here. So if that's too much, you could simply wait for us to close above this 50% level, right? Because this is 50% off the Asia range. So once we close above that, that's again a level of confirmation that price wants to go higher, because if we were to go lower, it wouldn't trade through that 50% level. But that's, is my mouse invisible? That's crazy. I'll take a look at that in a second. Thank you for telling me. But now that acts as a bullish order block. Let me see what's going on. Yeah, I don't know. 1 second. Oh yeah, this happened last time actually. Let me try something. Right. You should be able to see my mouse now. So yeah, so I was saying we're closing above the 50% level, and now this up close candle right here will act as a breaker. So let's get that delineated. So we have a low, a high, a lower low. We've had expansion to the upside, taking out that high, And we've also closed above the 50% level of the Asia range. So now that up close candle is going to act as a breaker. And then this would, to be honest, this entry would be more reasonable, and that's just because, like I said, I'm looking for more confirmation and more willingness to want to trade on higher. So this is what I want to see ideally. And then we also have a fair value gap that's formed at the 75% level as well. So that could be another entry right there. So let's have both of these marked out, and I'll also get that. What is the Dixie and what time frame is it? No, this is Euro USD and this is the 5 minute. I don't tend to backtest Dixie. Dixie, I purely, although I look at it Dixie a lot, it's more so as I study it because, you know, it's leading in terms of the overall market direction, right? So that's more so why I wouldn't backtest Dixie, and I only backtest the actual pairs themselves because they'll deliver. As in, that's where you'll see most of the movement, if that makes sense. Fair value gap there. And then if I was to enter along here, for example, my stop loss would likely be put below this low right here. My mouse isn't working. Bear with me 1 second. Right, that should be much better. So 4 a.m. is also a significant time off London when you may expect to see some kind of movement. So if I move to 4 a.m. here, although on the 1 minute you'd likely find a setup around the high of that Asia range, and obviously we have this pullback just before that as well, but 4 a.m. is also something to look into. To be honest as well, this move from this low, from this entry right here into the Asia range high, that could be a scalp in itself. So you could easily take off some of your position there if you wanted to be a little bit more safe, and then maybe leave some on to see, okay, can we now reach the next level? And then in that case, I'd be targeting these relative equal highs right here. So let's get those highs marked out and define them as buy side liquidity, and that's purely because they're relative equal highs. Remember, we're leaving the Asia range, we've closed above the 50% level, and we're seeing a willingness to want to go higher. We've now taken out the high of the Asia range, and it's at 4 a.m. as well. So like at this point, there's a likelihood that price is going to continue to run. The only thing that would throw me off at this point would be the fact that it's Monday, and I hate trading Mondays, especially Monday London. But other than that, I'd be looking at this for buy side liquidity. Why is that? Yeah. Cool. So then that's where I'd want to be getting out of my position. I'd probably at 5 a.m. I'd probably let off some of my position, just because once it gets between that 5 a.m. and 7 a.m. time, it can get very consolidated. So maybe we might close out half the position or more there, and then our ideal target would simply be above that buy side liquidity. Obviously easier said than done, but that's how I'm utilizing that Asia range in order to figure out how to enter and use it as a buffer for price. So this New York session isn't the cleanest, and you can see there's not much movement in it either. Let's check something. One thing I learned from backtesting is how price uses the previous ranges as, you know, to key off. The same way we were using that Asia range to find different levels in price, you can now use the London range to do the same thing. So if we look at the 25% level of the London range, there's a fair value gap there, and you can see how price trades into it at 8 a.m. here in London as well. So we're treating it the same way. Now, don't get me wrong, price could have come down to that 50% level as well, but So it's not a matter of knowing what level it's going to go down to. It's more so if we're expecting a reversal in New York, sorry, and we're at a key level such as the 25% level off the London range, I hope this makes sense, then when we start seeing support and price moving away from it, it adds like a level of confluence, because it's like, wow, we're at a significant level, time of day, 8 a.m., and we'll find a support at that level. So now we can, we're now in a position where it's like, okay, price will likely want a continuation, and you can see that we get that here, and then we run out that this high right here. So before I go on to this trade, this entry into that down into here, I am going to talk about the range between 5 a.m. and 7 a.m. I treat this again similar to the Asia range, and what you'll find as well is how I'm treating these is literally how I treat fair value gaps, basically, because it's all the same thing. And then similar to the Asia range, remember I was saying our price likes to take out the low and then run for the high of it. So I want to see the low get made and then run for the high. The same with this range. So if we drag this range through, you'll see our price targets the low of it. And then if we get a reversal, which we do right here, as soon as that starts to trade on higher, I'm like, okay, where would we target? I'm looking at this high. But like I said, this New York session doesn't look too clean, to be honest. Not ideal. So yeah, I'm going to mark out more things that I'm recognizing as, as we go along, just because this is how you're supposed to backtest in general. So mark out any fair value gaps you may see, like here. And then we have a setup right here. So again, 8 o'clock, I'm looking at 8 o'clock the same way I look at 3 a.m. in London. So it gets to 8 o'clock, I'm expecting a setup to form. We trade lower, and don't get me wrong, I may be thinking we may want to be going short. So this is where that 25% level from the London range comes into play, because I'm seeing, okay, how does it start to treat these levels? If we find support and it holds price, then it's likely we'll get a reversal at the 8:30 time. I do think that was high impact news on this day. I can't recall. So I will get that marked out as well. And then you can see our volume is sitting above that fair value gap, which is nice to see. In terms of entry, in this sense, I'd need to see movement. There's no movement here after 8 o'clock. There's no movement until this candle, and it's a large up close candle, isn't it? So as that's trading on higher, I'd start considering going long. Remember, this red line right here is Sunday's opening price. So every time we're below it, and then when we trade through it like this, it should be able to provide us enough support to get to our targets. So you'll see how we touch it and then trade on higher, and then we have this nice down close which trades nicely into this breaker wick right here. So this is the low, high, lower low, and then we have this expansion after 8:30 with willingness to want to go higher, and we're respecting the 50% level. So this breaker wick can be used as an entry as well. Now obviously time of day plays a massive role. It's after 8:30. We're finding support on top of that fair value gap. There's a willingness to want to go higher. And remember, we're looking at this range now between 5 a.m. and 7 a.m. Has the low been taken out? Yes, we've done that at 8 o'clock. Has the high been taken out? No. And is there a willingness to go higher? Yes. So where should we be targeting? Well, we have relative equal highs, which were created in the New York session, but this would be an ideal goal or target. So let's get that marked out as a entry. This will be quite a safe entry because it's not until 9 a.m., which is also a significant time to study. But I'd be looking to go long there. This can act as a breakaway gap. So this fair value gap here, I don't really want to see it get traded into, especially not after going above that Sunday opening price. And then I'll be looking at this high to offset my position. Now this is obviously ideal. In the ideal world, you can see like, this is why I don't like London closes, because this massive pullback right here, that would drive me insane. And I'd like to think that I would have taken off most of my position anyway at these relative equal highs if this was a scalp. So let's get those highs marked out as buy side liquidity. And then we can assume that we took out we took out like say half or most of my position, because not gonna lie, I probably wouldn't end up, unless the only way I'd hold from here all the way up to here would be if I wasn't in the charts. But if I'm actively in the charts and watching it and following along, once it hits that session and I start seeing all this happen, I'd probably just close my position completely in profit, because it's not nice when price starts to consolidate this heavily, and obviously you got this large target. So that's everything over there. Let's get this marked out as a breakaway gap just so we know. I'm happy to post screenshots in the Discord as well of this analysis if you guys want. Breakaway gap. This is a breaker high. And also it's interesting to see how fast price is running lower. When we want to see the New York session close in a certain direction, let's say we want to see it close higher, I actively look for price to trade lower. So when I'm seeing this open at 7 a.m. and price is already trading lower, failing to take out highs, and starts running quick like this before 8 o'clock, I'm then expecting that we're going to get a pullback, because it should be doing the manipulation for the session. Similarly to over here in London, as soon as London opens, what's happening? We trade aggressively lower to do the manipulation until we get a reversal at 3 a.m. So it's the exact same thing that's happening here, and that's why when we do see movements lower like this, especially at 7 a.m., you can trade them, but it's like if you have a bullish bias, there's no need to trade against it. You should just wait and expect your reversal, which is what we eventually get. Now, obviously, you can see price does break down later on in the day, but by this point, I'm not trading anyway, and stuff like this, I don't really want to be involved with. So, nonetheless, let's move on to Tuesday, and we're going to just pretty much apply the same logic, and you'll see what I mean when I say that. So, looking at the ranges, the specific times of day. I just want to copy all these over, so let's get this all moved over. So now we're going to be doing the exact same thing. So I don't look at session. I don't know what you mean. Whenever I get PA, then I follow them. I don't know what that means, bro. See, stuff like that you don't want to be involved in. But obviously that was high impact news at 8:30 here. So things like this we can almost anticipate, but I'll talk more on that as we get there. Let's do the exact same thing that I've been talking about. So now let's acknowledge that we're below the Sunday opening price right now. We've obviously traded into a premium yesterday. We've created a classic high, low, high with a break lower. So now I'm looking at this down move to provide resistance in the new day. So I'm looking for price to key off these levels, specifically the last down close candle. And if we drag that right through, you'll see our price refers to that. So let's get that drawn out. And I'll talk more on that as we enter into it. So, but that's a breaker basically. But we'll talk about that in a minute. First, let's look at the Asia session. I'm going to do the exact same thing we just did on the Monday analysis. So we'll mark out the highs. And we want to mark out the low as well. So remember I was saying I use the Asia range because I want to see, can we take out both the high and the low of it? And, excuse me. So right here's a classic example of that. Price comes down, takes out the low of the Asia range. So what are we expecting? The high to get targeted. So again, this is like a classic setup for me. I really like this, is when price will go for one side of the Asia range and then I can simply just get in on a buy to go long with the expectation to take out the high. It happens all the time. It didn't happen on the Monday. As you can see, we failed to take out the Asia low first. But if you study that, you'll find that price will use it as a buffer, and then we'll even use it later on in the day, like when we trade through it, to act as resistance and support. So let's go straight to the London session. And then remember, 3 a.m. is the time I'm looking for my setup. Now, there are setups that form before this, and that's because we've taken out the Asia range low before we even hit London. So price is obviously in a rush. Nonetheless, we come lower, tap this low. I believe this is a low from, yeah, this is the Monday low. Grab stops, and then price is showing support. So price moves away from it. And you can see as soon as this candle closes above this is now a bullish order block. So we can drag this out, and now we're watching this block to see, okay, can price find support on it? We move away from it again, running out more highs, return to a bullish order block and a nice fair value gap. So this would be the ideal entry, optimal entry, just before 3 a.m. as well. And then I'd simply just target first these relative equal highs, which are at 50% level off the Asia range, and then I would let off the rest of my position above the London range. So above the Asia range. On the 1 minute, this right here, there'd probably be a breaker inside of that we could get in on. However, we're on the 5 minutes, so we'll just keep it simple. So we've got a bullish order block, fair value gap, coupled with a bullish order block. And remember, we've traded through, and once we start trading through up close candles like that and closing above it with this kind of strength, and we're back inside the Asia range. So right here, we're in a big discount. We're outside of the Asia range. Once we close inside of it like that, price will want to stay inside of it, and you'll see that with how price treats the low and highs of the Asia range. But you can only see that through backtesting it yourself, but I'll make sure to highlight it every time we witness it. But nonetheless, fair value gap right here. And then as price is trading down into that, that's a long. And then I'll simply put my stop loss below the 50% level of the bullish order block that started the move. Any low, if price goes back, if price was to go lower than the 50% level of this order block right here, I simply would get out of the position because it's not showing support for my bias. So we can go long there. And then 3 a.m. you can see our price starts running. And this is the kind of 3 a.m. expansion I'm talking about. You can expect and anticipate movement at 3 a.m. First, we can look at these relative equal highs above here to get targeted. So we'll get that marked out as buy side liquidity. And then you can see we find support on that, and then finally run out those Asia highs as well. So let's get out of our position there. Now this is where it enters a consolidation, and to be honest, the fact that we've moved so fast and so quick at 3 a.m. from a deep discount to a premium in terms of the Asia range, I'm not surprised to see price act like this. It does look, I can imagine there was high impact news at 8:30 at this point. So as we're trading into this down close candle right here, I'm watching to see how price is treating it, and you can see it's consistently finding resistance until eventually we whip up to create a high above engineered liquidity, and then price obviously breaks down at 8 o'clock. Now, if you remember, when we studied the Monday, there was a time frame which I like to look at. It was between 5 a.m. and 7 a.m., wasn't it? And I want to look at the high and low of it. And I'm expecting both sides to get targeted. Exactly the same logic here. So I'm looking between 5 a.m. and 7 a.m. So let's mark out the highs and lows of that. And remember, I'm expecting both sides to get taken, just like with the Asia range. So now that we've got the high and low of this, what happens? Price trades higher, takes out the high of that side. So what can we target now? We can target the low of it. So there, another simple, setup that tends to occur quite often when we're taking out both sides of a specific range. What adds to this is, what I was going to say, again, I was explaining when we were studying the Monday, I was explaining that if I'm expecting the New York if I'm expecting New York to expand in a specific direction, let's say lower, I want to see price rally higher first. And that's what we see happen here. We rally higher, taking out that high between 5 a.m. and 7 a.m. And then at 8:30, price starts to run lower. Same thing happened on the Monday, except the opposite. We wanted to see it expand higher. It traded lower from 7 a.m. till about 8 a.m. and then price reversed and traded on higher. Now this only works. Well, I say it only works in the environments of a New York reversal, but you can also see similar behavior in the continuation, because although at 7 a.m. we don't rally straight off the bat, we come down into a deeper discount and then price jumps. And this is typical of the consolidation behavior, and that's what we see happening right here. But nonetheless, 8 o'clock is when I'm looking for my setups to form. You can see we're trading up into that breaker. Remember, this orange box is that high time frame breaker. So as we're trading into that and we're above this premium and we're expecting lower prices, why? We're below that Sunday price. We've already created a high premium on Monday, and I'm pretty sure there are some other high time frame PD arrays I'd be looking at. Then I'd be happy to go short as we trade into the breaker. Also, these relative equal highs, this high, these highs right here, this is all engineered liquidity, as in it's clearly placed there so that price could run up and grab it. In terms of stop loss placement in times like this, it's probably be this Sunday level right here, because if price was to trade above that Sunday level again, I wouldn't want to be involved. It's as simple as that. So we could easily go short as we trade into there at 8 o'clock. Remember, 8 o'clock is my ideal time. Generally between 7:45 and 8:15, I'm looking for my setups for when it comes to New York, and then place my stop loss and then let 8:30 do its thing, assuming it's not CPI, non-farm payroll, things like that. But usually when there's high impact news, that's like, it might be jobless claims and things like that, you can get in on pretty nice moves in general. So let's do another entry here. This kind of backtesting, by the way, this is how I recommend you go and backtest, just because it trains your eyes to see setups, and when you put it in realistic places as well, when it comes to it live in the markets and you're applying everything I'm applying, it will become a lot clearer through time. I say that although I haven't backtested in a very long time, so it is good to be back, but yeah, I highly suggest you do. So this low that we created in the London session, that can be used as a sell side liquidity target for price as we're going short. And then we can also use the low from yesterday. So this, although we've grabbed that low just by a little bit, these are now relative equal lows. Why? Because they're relatively equal, right? So price loves relative equal lows and relative equal highs. That's where liquidity resides. That was a rhyme. But nonetheless, this would be a perfect target for price. So that would be where I set my limit. And what's also interesting is the fact that, remember, we didn't take out both sides. This is another beautiful thing about the Asia range. We didn't take out both sides of the Asia range on Monday. We only took out one. We took out both sides here. That's what we like to see. But the fact that we only took out one here and we're going short now, we can now use that Asia range low as a target, because, well, it didn't do it yesterday, so it's going to do it today, isn't it, on the Tuesday? And that's what we see happen. So again, that just adds confluence as to why I'd want to get out of my position at that point. So let's one sec, my mouse is so that's where I'd want to set my limit. And then you can see our price as consolidates and starts trading higher pretty quickly straight after, which is completely fine. After a move like this, when you have big 8:30 moves, between 8:30 and 9:30, price will tend to consolidate, and you'll either get a reversal or you'll get a continuation. In this case, we get a reversal, and personally, I don't like these reversals just because of how cheeky they make them. It's very hard to see. I prefer when price will move lower at 8:30, it'll consolidate into 9:30, and then we'll see the continuation in the London close. Nonetheless, we have a reversal here. I personally wouldn't be trading this, just because being able to anticipate price to pull back so heavily like that is quite difficult. But if you watch this week's videos, you'll know that after seeing us trade like this and trade higher and run out this high specifically, after seeing that, we were then able to pretty accurately predict and expect price to then run aggressively higher. So yeah, that's how I'm looking at. That's how I generally navigate. Let's do the same thing on Wednesday. Then we'll look at the Thursday. How long we've been going? Half an hour. I'll probably finish this up in 30 minutes, guys. But yeah, I'm just gonna get all these marked out, so I'll drag them over. So let's move this over as well. Quick, go on. So again, we're looking at the Asia range, and this is going to get repetitive, but genuinely, this is how I'm approaching my days, as in when I want my trading days. And also, one thing to take note of, that this is that breaker low, right? So the fact that we traded into it and keyed off it, once we traded through it on the buy side, it should treat it as support now, and you can see that happen right here. So although it's a down close breaker, it's treated just like a fair value gap. Do you trade at the time of? Do you trade at the news time or before the news time? Like I said, ideally when it comes to trading news, it's my setups forming around 8 to 8:15. I'd rather be in my position before 8:20. If it gets to 8:20 and I'm not in a position, it's probably because I'm unsure, and if that's the case, I won't trade it, period. Trading after news is a possibility, but that usually forms around 9 a.m. and I haven't done that in a very long time, because there's usually a macro between 9:50 and 8 and 10, but generally speaking 8:15, and if I'm not in one, then it's because I'm too unsure and I don't want to be in it. But as I was saying, this breaker, so look how price consolidates at it and then aggressively trades through it and uses it as support. So now it's just using these like fair value gaps, which is nice to see. But I'm not gonna drag that into our day. And also, it's also lined up with the Sunday opening price as well, and it treats it the same way. On the buy side of it, find support on it. Price shouldn't need to come back below it. So definitely study your Sunday opening. I highly suggest having that marked out throughout the week, because you'll see how price uses it, and once it's above it, it's really easy for price to key off its bullish PD arrays to trade on higher once it's above it, and once it's below it, it's really easy to see how price uses it to, trade low, and will comfortably do so. And whenever price usually passes through that Sunday opening price, it tends to be doing it with aggression and quickly. For example, here we trade down, we're moving at a very fast speed to get through it. On the upside, a little bit more consolidated around here, but Sunday opening price is definitely one to have. So Asia range again, we look at the lows and highs, and remember what we expect. We want to see the low of the Asia range get high. We want to see the low of the Asian range get taken, and we want to see the high of the Asia range get taken. Same thing. And what happens? Price takes out the low, and then what does it target? The highs. It's like magic. So you put that there, and that in itself, look at that move from here, this low up to there. That's a scalp. That's a day's work done. Like you can do that with the right risk management. That's enough for a days, and then you just leave it. And yes, obviously we run on higher, and that's nice to get in, but that's why we leave partials, and that's why we take partials, and I'll talk on that in a bit. So same thing, it comes to 3 a.m. I'm looking for my setup, and what do we have? Reversal classic for 3 a.m. Now this right here, this is beautiful to me. So prices ran on higher, we've taken out the Asia low, we've instantly traded on higher, we've taken out this swing high right here. This is a significant swing high. Why is this a significant swing high? Well, it stands out in terms of this curve right here. It stands out. And as we're trading through that high, let me make this more specific for us. as we are trading through this high right here, we have a breaker form because we have a low, we have a high, we have a lower low, which is taking out the sell side, and now we have a higher high. So now we're looking at any up close candles, such as this one or this one, inside the range that price may want to trade back into to then trade on higher, because we're expecting to now run for that Asia range high, and then whatever other buy side we have in mind, such as up here. So let's take a look. Do we have a breaker? Well, we have two up close candles, this one and this one. Let's drag those out. Let's get the whole range of it. And you can also see how those up close candles also line up perfectly with this fair value gap. Now, when you have a fair value gap line up with a breaker at the right time of day, and you're on the right side of the market, that is 10 out of 10 setup for a 10 out of 10 setup for me. Like, that would be a very high probability trade when you got a clear fair value gap and a clear breaker, and then price dips itself into it and leaves it straight away. We don't want to see price hanging around. We just want it to get in and get out. So you can go long there and look at that. Look at how we respect that 50% level. That's what you want to look and study as well. That's also where my obsession with midpoints, if you've been watching my videos, I always draw our attention to the 50% level, 25% level, and 75% levels. More so 25% and 50%, just because they're more significant. But this is an example of the 50% level being used as consequent encroachment. It's showing a willingness to want to trade higher. Another thing to take note of, now, because we're on the 5 minute, we can't see, there is an implied fair value gap right here. This upside delivery right here, there is a fair value gap there. Now, on the lower time frame, there will be on the 1 minute, for example. I'm not going to drop down just because it's long to find my spot and everything. But what I'm saying is that we actively look for things like this, because that will act as a breakaway gap. So we don't necessarily need or want price to have to trade down into that. So we have a fair value gap here. We have a breaker block here. And then if that wasn't enough, so let's say it's 3 a.m. and you see this move higher and we've taken out the low of the Asia range. If that's not enough for you, you can simply wait, of course. And then what happens? We get back above that Sunday opening price, which is significant for us. And then there's another entry right here. Now remember, what was the other time I spoke about? I said 4 a.m., didn't I? So although 3 a.m. there's setups, you can find them at 4 a.m. as well. And this is a perfect example of that. Look what forms at 4 a.m., a fair value gap, and what's happening. Price is respecting it. So if we didn't get in at this stage of accumulation, we can get in here. There's in delivery of price, that IC taught this in his 2023 mentorship. Like, there's different stages of delivery. There's first stage accumulation, second stage accumulation, and sometimes a third stage accumulation. And then it's the same with distribution: first stage, second stage, and third. This would be an example. This would be an example of first stage accumulation. So you can anticipate a form of second stage accumulation happen, and that's what I believe is happening here. What helps us with that is, again, time of day. So 3 a.m. I'm expecting a setup to form, either a reversal or continuation. In this case, it's a reversal. We've taken out the low of the Asia range, and then we have a willingness to want to go higher. What do I mean by willingness? Well, let's look at these two candles. These two candles have got through 1, 2, 3, 4, 5, 6 down close candles, has been taken out through the matter of just 2 large up close candles. That is a willingness to want to go in a certain direction. So it's that kind of movement I'm actively looking for if I want to be entering. Again, here's that second stage accumulation, 4 a.m. a fair value gap forms, nice little consolidation. And what's interesting as well, not only are we respecting the 50% level of this fair value gap, but if we look at this down close candle, which is a bullish order block from this low to this high, you can see our price is respecting the 50% level of that as well. So we're seeing continued respect of bullish PD arrays, which should add to our confluence. And this low that's made just below, you see how that Sunday opening price is at the 50% level of this low, 50% level, sorry, of this wick. price shouldn't need to go back below here, because remember what I was saying about that Sunday opening price. Once we're above it and price is clearly finding support on it, it can be used now as a, you know, a stop loss. We could go along here, stop there, and then obviously we have a daily. Was that a daily high? That's a daily high right there. So this could be a low hanging fruit in terms of targeting. We could get out of our position on this candle, maybe leave some on. It would have been nice to obviously get the high. I can't recall what we traded it into, but there would, I think there was a 4-hour PD array up there, or 1-hour PD array from like September. So I don't know, if you were watching my videos last week, you'll remember, but there was some kind of premium PD array up there that I remember wanting to see price reach for. But again, low hanging fruit, we have a daily high. This is why at the beginning of this live stream I was saying how I wanted to mark out the daily highs and lows, because you'll see how price just runs to them and targets them, and they can be used as, like I said, low hanging fruits for targets. So let's just say we did get that low hanging fruit. That would be enough for me, or I could take it as a partial and then see where we get to by 5 a.m. So you can see the rest of the day we just consolidate right into Thursday, I believe. Let's see what Thursday did. I can't remember. We trade on lower, right? So after large movement like this, and remember we've been moving higher since Tuesday now. Tuesday we've had a clear run higher with a continuation on the Wednesday. So now as we're entering the New York, its price is getting tired, and we have to be just a little bit more weary of how we want to get to the next stage. So I'm going to do the same thing again in terms of looking at the range between 5 a.m. and 7 a.m. And again, remember, we're anticipating price to take out both sides of it. And it does do it, but in a very ugly fashion. So I'm going to go over it quite quickly, and then we'll head straight onto the Thursday. Let's see what we can find. Do I trade non-farm payroll a day, and how do you trade before? I don't trade non-farm payroll. There's no need. There's no need to trade it, so I don't trade it. Don't get me wrong, if I want to do it, I'll do it on like a demo, but like in terms of like, I wouldn't actively do it because there's no point. If you can get your bread and butter at a safer choice, then, or at a safer location, then you might as well, because the risk of non-farm payroll is wild. So here's Asia. Here's the London. I'm going crazy. Here's the New York. This is an example of a New York continuation, I guess, in a way. We trade on lower before we hit. Remember, although we do take out the highs here, price has a pretty hard time of getting there. I wouldn't want to be trading this, because when you see a big move like this before we even enter New York, I'm not surprised that it's this consolidated like that. We don't really want to be seeing expansions like this happen before New York. Don't get me wrong, it can, and sometimes you'll find that between 5 a.m. and 7 a.m. you'll get a huge move higher or lower, and price will run heavily. I'll have to try and find an example at some point. But when you're not anticipating it and it does this, and then we jump right into New York like that, it's gonna struggle because it hasn't used that time to engineer liquidity. It's clearly used it to get itself into this consolidation, because look how range bound it is. It's not ideal. And yeah, some price action, when I see it, I'm just like ill, and then I'll just turn off the charts and just wait for the next day. This is Euro USD. You should be able to see that, but yeah, it's Euro USD. This is last week's price action. So now let's finish up on the Thursday, where we have quite an ugly London session, but nonetheless, let's continue. So the Asia range, again, we're doing the exact same thing. Now this is an example when both sides of the Asia range does not get taken. Now, when this happens, it usually means that price is going to run really quickly in one direction, and this can happen in London, but in this example, it doesn't happen until 8:30 New York. But there are still levels inside the Asia range that we can use to help us predict or anticipate such movements. So if we look at that 50% level and 75% level, and then we also want to be looking at the volume of candles. We're not going to be, don't so much concentrate on the wicks right now. The wicks do the damage, but we're going to look at the volume. Now this London session, it's not the best. I mean, don't get me wrong, there is a setup, 3 a.m. Price runs higher. What's it run into? Breaker, last down close candle before the up move. We run up into that, can go short there, and I guess that's a little target. But you can see that's over in less than like 40 minutes. So for a scalp, that's fine. You know, I'm not against scalping or anything, but, and don't get me wrong, I may go short there, expecting us to get in on a bigger movement, maybe running for these lows, and then we'd see this pullback, and that would just drive me insane. So there's gonna be times you are trading and it's not going your way, and this may be an example of that, which is fine. It's just knowing how to handle it, and then seeing how we can use our knowledge to improve. So let's see. So look at volume. Volume's reached above the 50% level of the Asia range here, and then we keyed off it, traded lower, and now we're just in a consolidation. But if we look at the 50% level, you can see that volume continuously stays below it throughout the entire day until we eventually leave the Asia range or this consolidation. And then what do we target? Let me see, I can't even remember. These, I'm guessing these lows. Yeah, this daily low right here. So let's take a look at this. What we can do the same thing we were doing on the other days. So again, that range between 5 a.m. and 7 a.m, we can look at the low and high of that. We're expecting both sides to get taken. We take out the low of it here. Let's just get that marked out. And then we want to look at the high of it as well. So once we've taken out the low, and we can see that it's 8 a.m, which is where I'm looking for my setups to form in New York. I don't like this. But nonetheless, we have expansion. We've taken out all of these up close candles, all been taken out. We're now back inside of the Asia range. Price comes down into a fair value gap. So I guess you could enter there with a long. And then at this point, as we're entering down into that, we can target that high. What high? The high from between 5 a.m. and 7 a.m. because we're treating this, remember, the same as the Asia range. We're anticipating, not necessarily, it's not a guarantee, but we're expecting price to want to target the other side. Because why? Well, we're taking out the low of it, and there's a willingness to want to go higher. So where's it going to go to? Well, probably the high of this range that's created right there. What you'll find as well is that wick, quite interesting. You can see we just traded into the 50% level of this long wick. That's another reason, again, consequent encroachment. And then what happens? So that's at 8:30, we trade up into that, and then we get a break lower. As soon as, okay, we can actually use this fair value gap. As soon as we break out, so remember this is the low of the Asia range, as soon as we break back out of that and we're closing below it, and remember this is a down close candle, we're trading through it, this return back into it, that would be classed as a breaker because we have a high, a low, a higher high, and then price is traded down through it on the downside. So any kind of retracement back into it, and that's what we see happening right here. On the lower time frame, it would be a lot more clear, but we know that here between this low and this high, there's obviously some kind of retracement. There's a movement higher. That's just a classic breaker movement: high, low, higher, high, break lower, retracement into the breaker. So you can go short at that. What can add to this is the fact that this is the Asia range low. We've traded to the 50% level multiple times today. 1, 2, 3, here, 4. So the price doesn't want to go back above there. Another thing to take note of, we've already taken out this high right here in London. So we've got, like, this high has been tagged. If price was to take out this high now, it will be running on God knows where into higher, into higher targets, but it's not. And then we can start looking at the 50% level and seeing our price is keying off this wick now. 25% level, cool. 50% level, cool. And then we leave it. So once we close below, we'll trade back into it. This is a short opportunity, and then we can wait. And if that isn't even enough, let's look at the 50% level of this volume of this down close, and you can see 50% level is also that low. So right here would be an optimal entry. Obviously, in this case, I'd probably drop down to the lower time frame. It'll be a lot more clear. But nonetheless, we can go short there. Stop loss above here. And then where would we target? Well, my first target and low hanging fruit would probably be this low, just because it's a significant swing low and it'd be easy to get to. So let's get that marked out. South side. Can you guys see it? 1 second. Oh, okay. Cool. And then you'll also see how price runs back to that Sunday level. So again, this Sunday level, Sunday opening prices are hard to like explain, because even I don't fully understand it. But you see how it's almost using it as a liquidity grab. Like, look how price ran straight to it, and as soon as we grab liquidity below it, we're retracing again and we're in another consolidation. But it's using it the same way as it would a relatively equal low or significant swing low. So that's quite interesting. So I guess you could take off your stops below there. There is this low right here that was made, remember, on the Wednesday. So let's get that dragged out. Oop. Did we even grab that low is the question. And if we didn't, oh yeah, we did. So look, south side liquidity grab there. We could use this low, and that would be a nice exit for price. Let me see what time it is. 7 minutes left. Cool. And then we enter a little consolidation, and then price just runs on lower into the Friday. Now, like I said, I don't know why there's no data on forex.com for Friday. But that should be fine. But let's look at how price ran down there though. So let's say we didn't get in on this absolutely beautiful optimal entry right there. This would be a very, very, high, very advanced entry. If you didn't get through on that, and that wasn't enough for you, we got this down close right here. As soon as this candle closes below this low, we have another breaker form. So we have now a high, a low, a higher high, price closes, and then retraces. This last down close candle is now a breaker, so we can drag that out. And what is the breaker coupled with? It's coupled with a fair value gap. And if you remember what I was saying literally like 5 minutes ago, there's nothing better than a breaker coupled with a fair value gap. So the price trades back into that. Beautiful shorting opportunity there. It's on the 5 minute as well, so that means it's a lot more clear for us. And because it's on a higher time frame than say the 1 minute, which is where I'd likely enter this, because it's on a higher time frame, that helps give us more movement for it just makes it a little bit more high probability for us, doesn't it? So then we go short, and again, what we're targeting, this is very low hanging fruit if you wanted to scalp, but that Sunday price is nice enough. Let me see, there should be some other PDRAs in between. There's this massive fair value gap, so as price trades down into that right here, that could be enough, as soon as we enter it, just to close your position or half your position there. And then you see how we treat that 50% level, price 2 up close candles, order blocks created there, and look how we're treating that 50% level. Price is saying no. Now don't get me wrong, we're wicking through it, but look at the volume's saying something else, isn't it? Until we have a continuation. Another entry there, fair value gap, last down close candle, breaker, go short, and then this is a daily low, isn't it? So yeah, that's gonna be all for now, people. I hope you found this insightful. Definitely do join the Discord if you haven't already. The link is in the description. Join the mailing list. I've been telling people to join this mailing list for like 3 months now, but I promise I will eventually have something coming out on there. And if you enjoyed this, I will be putting a poll up. Tell me how you found the live stream. If you want this on a weekly basis, it's definitely something we can do. And yeah, thanks so much for watching, and I'll catch you guys in my weekly review, which should be out tonight, probably around midnight, for the normal. Thanks for watching, guys, and I'll catch you in the next one. Peace.